You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time to take a walk on the futures options side. Yes, it is time for TWIFO. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. So pleased to see so many new listeners joining the network week after week, not just for TWIFO, but for all the programs we have. Remember, if you like what you hear, keep those reviews coming in your platforms of choice. I know the network's been around forever, but these days are certainly tumultuous times. People are a little bit righteously concerned about the markets and about volatility and things like the election and the pandemic. They're looking for reliable sources of content. Your reviews help them find said. So we like to keep that flow going, keep those reviews coming wherever you find this program. Of course, all the major outlets that it's available on, more all the time. Just added Amazon Music last week, I believe. So new outlets being added all the time. Of course, keep those questions coming, too. We do love to hear from you guys. And let's see who we're hearing from on the old program today. First, joining me, holding down the FTSE Russell hot seat, my old friend and compatriot here in all things futures options crime, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to TWIFO, sir.
Mark, thanks for having me back. It's great to be back. We've got a great show today. I'm very excited to be here. Looking forward to having some fantastic conversation about futures and options.
Yes, it should be a fun one. And you know, Sean, there's so much going on in your neck of the woods and in equities in general that we couldn't just have one hot seat devoted to it. No. We had to go double duty this week. So holding down the CME hot seat, someone you may be familiar with, Sean, Ms. Catherine YOSHIMOTO, the Director of Product Management over there at FTSE Russell. Catherine, welcome to This Week in Futures Options.
Thank you for having me.
And Catherine, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial space, as well as what it is that the Director of Product Management does day-to-day over there at FTSE Russell.
Sure. So I joined FTSE Russell, what was Russell Indexes at the time, about 10 years ago. So I've been with FTSE Russell overall about 10 years now. I cover our market cap weighted equity index products, Russell US, FTSE Global Equity Index Series. I've been in the financial services industry for quite a while now, about 18 years in total. I'm happy to be here to talk to you about our Russell Indexes.
All right, let's get to it. Let's kick off the show the way we always do. It is time for the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
How you like that, Sean? Mixing it up a little bit this week.
Fancy. I like that a lot.
Don't worry. There's more to come. Should be fun. But Catherine, as our guest this week, you get pride of place. We always start the show looking at what's moving to the upside and to the dark side every week. So you should choose where we begin our journey, Miss Catherine. Should we go to the upside, a.k.a. the light side, or to the dark side?
Let's start with the dark side.
All right, dark side. I like it. You're all going contrary to what Sean picks every week. And actually, it's an interesting week for the dark side because most of the movers and shakers over there at CME this week are moving to the upside. A lot of green on the screen this week, but we're going dark first, listeners. Number 5 to the dark side, off 2 and almost 2.4% or so, is feeder cattle. Number 4, class 3 milk, off about 2 3/4%. That was number 3 to the upside, to the light side last week, so a little bit of a switch there for class 3 milk. Number 3, back to the metals, platinum, off 3.83%. That was number 4 to the light side last week, up 6 1/3%. And by the way, before you ask, talked about it last week, only about 50-odd contracts going up in platinum this week on the options front. So not a lot to parse there, but there are a lot of contracts going up in our number 2 to the dark side. This is Eurodollars, off exactly 5% from last week. It was number 1 to the light side last week. So a lot of moving and shaking going on out there in Eurodollars land last week and just over the last couple of weeks. And number 1 to the dark side this week, lumber. Lumber's having a rough run of late, off 7, almost 7.1%. It was number 2 to the light side last week, off, or I should say up 7 3/4%. So big swings in lumber. That's a pretty beefy contract. This is not nat gas we're talking about, listeners. That's a pretty beefy contract and still moving and shaking. Let's switch to the upside now, see what's lighting it up to the upside. By the way, all of you keep asking about Bitcoin. It's up, but it's not up enough to break our top 5. Actually, it would be number 22 if we included it, up about 1.5%, a similar level to what it was number 18 last week, I believe. Also, the Russell 2000, almost not quite breaking into the top 5 this week because there's so much green on the screen this week. Most weeks, this would probably be enough for number 1. It's up 6.2% on the week, but not enough to crack into the top 5 this week. That shows you how green the screen is this week, listeners. Number 5, our old friend WTI, up almost exactly 6.5%. It was number 2 to the dark side last week, almost exact same level, 6.49% for number 4 with wheat. So a good week for wheat out there. Number 3, back to energy, RBOB, up 6.88%. It was number 4 to the dark side last week, off about 3.5%. Number 2, our old friend Lean Hogs. I haven't checked in on them in a little bit. Up nearly 7%, 6.92%. It was number 7 in the opposite direction last week, off about 1.2%. And number 1 with a bullet this week, KC Wheat, up 7 3/4%. It was number 6, so outside the top 5, but still on the light side last week, up 5.5%. So it goes to show you how strong the last couple of weeks have been on the upside. But we got double duty, a lot to talk about in the realm of equity. So without further ado, let's dive right in.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, it is time to talk equities like the man said. And we have 2 great guests to help us do just that. Catherine, before we dive into all the moving and shaking going on in Russell 2000 and all things FTSE Russell, I'm curious. These are obviously unprecedented times here in the markets. Of course, the pandemic, civil unrest, everything. So these are very much unprecedented times for anyone in the equity space, certainly in the volatility space and on the product management space. So maybe let's start there. Give our listeners a little bit of a glimpse, some insight into what the last 6 months, the tumults, the highs and lows in the market, the highs and lows in volatility, what that's been like for you through the lens of being a product manager over there at FTSE Russell and having to oversee equity products in this extremely turbulent landscape, Catherine.
Yes, certainly. It has been a turbulent year. Starting in March, obviously, we've all been feeling it. I guess one of the biggest changes that, impacted me personally is the Russell U.S. index has migrated to the new ICB framework just in September, but, that was a delayed implementation. We were originally scheduled to implement in June at the recon, but due to the feedback from our clients in the market following, the initial COVID stress in the markets, we delayed the implementation to September. But I'm excited about the changes because the new ICB framework essentially is our first step in providing a cohesive framework, including the FTSE Global Equity Index Series, which will be coming up in March. So these sector indexes have been, have changed from the 9 RGS sectors to the 11 ICB industries at the top level, including the creation of a separate ICB real estate industry and expansion to the ICB telecommunications industry. I'm pretty excited about this change because we added telecommunications equipment from technology, names like Cisco and Motorola Solutions, and cable television services moved from consumer discretionary, such as Comcast and Liberty Broadband, to create a more representative telecommunications industry. Going back to your original question, it's been a tumultuous year, but still, the show must go on, lots of changes going on, and we're continually improving our products to provide better, more representative indexes for our clients.
You talked about that shakeup. Let's talk about it a little bit because you guys, as you mentioned, kind of really made some whole cloth changes to the way the Russell indexes are working, changing up some of the sectors. Let's go a little bit higher level. Explain to our listeners why you guys decided to make some of the changes that you made.
Well, the enhancements for the ICB framework and the index transition were based on extensive client feedback and consultation. We actually embarked on this journey back in 2016. So it's been a long time coming. We actually improved the framework, the ICB framework itself last year in 2019, and we finally got to the index implementation phase this year. So again, I mentioned earlier, with the integration of FTSE and Russell, we combined our Russell Global Sectors framework, the legacy Russell Index framework, with the industry classification benchmark framework that FTSE already owned. So this enhancement brought together the best of both solutions for sector classification framework.
Yeah, if you're not familiar with that, listeners, industry classification benchmark, aka ICB. A lot of acronym soup these days in the equity space. But that's not the only changes you guys have made to all things Russell these days. You guys have been pretty active over there. So catch our listeners up here, Catherine. What else have you guys been working on and tweaking behind the scenes?
Well, not a tweak, but part of our regularly scheduled quarterly review that we do for our Russell indexes. So as you may know, Russell indexes reconstitute annually in June. And then in September, December, March, we have the regular quarterly updates, which includes free flow and share updates, as well as IPO editions. So this year, in September, the IPO editions, we have 46 new IPO additions to the Russell indexes. 30 companies joined the Russell 2000, with 18 of the companies joining the ICB biotechnology subsector within the ICB healthcare industry. So this is interesting to me because, the IPO has actually dropped quite a bit in June. As I mentioned, we do quarterly IPO editions on a regular basis. And in June is part of the reconstitution process. So in this June, there were only 6 IPO additions to the Russell 3000. So, a good, nice uptick in IPOs being added to the Russell indexes in September, and mostly in biotech for the Russell 2000.
Now, we talk a lot here on the program about what's driving volatility and skew changes and things like that in the Russell 2000. Of course, we'll get to that today as well because a lot's going on out there again. But, of course, the components, what's going on to these indexes and what's, of course, moving and shaking within the Russell indexes themselves are also key components of driving this volatility out there. So in terms of what's driving the markets, what's driving what you're seeing out there in Russell 1000 and Russell 2000, what's really top of mind for you this year, Catherine, in terms of what you're seeing really driving the big movement and shaking out there?
Yeah, so Russell 1000's performance has been driven a lot this year by the largest companies in the index. No surprise, Apple, Microsoft, Facebook, Alphabet. Those are large names that are in the technology industry. In the Russell 1000, they've been, driving the performance, followed by consumer discretionary. For the Russell 2000, healthcare has been a bigger driver, followed by technology and consumer discretionary.
And Sean, I'm monopolizing your colleague here, but I want to make sure you have a chance to get in here. Anything you want to ask here to Catherine now that we got her glued in and locked in to the CME Group hot seat, sir?
Catherine, it's just great to have you on the show. So thank you for joining us. I talk about the Russell 2000 and the volatility because of it being so massive. I also talk about the Russell 1000 as well, and the futures products, both of them RS1 and RTY that trade at CME Group, and the availability of liquidity in both of those products. But I also get into what's driving the market, what's driving the volatility. And, we've been mentioning healthcare as one of those heavy weights in the Russell 2000, and most particularly because of the Recon and the 6 IPOs that joined the Russell 3000 at Recon, and all 6 were healthcare stocks, which I found very interesting. But it makes sense, right? The market is looking for better, stronger healthcare. Lots of IPOs. It's heavily weighted, and it's a major focus of not only the financial industry but the world right now. Healthcare is quite a frightening thing with COVID, so it's getting a lot of focus, and that weight within the index is actually driving a lot of the volatility. And it's just interesting to see every time there's of a vaccine or there's more legislation to increase medicine, or small businesses in America are going to be receiving some more benefits from the federal government. All of these types of things drive that small cap, that domestic U.S. index in directions. And I say it a lot, but it does outperform. And what do you say? The Russell in the past week is up 6+%, and it's just been incredible to watch the movement of those Russell indexes. So it's just fantastic to have you on the show to just get into the weeds as to what's driving our indexes and the components of them. And the new ICB classification benchmarking is just a way that we are making our indices more efficient and better products for our investors to use and trade. So thanks again, Catherine, for joining us today. I'm very happy to have you here.
Happy to be here. Thank you.
Well, Sean, you brought up Recon, and I want to get to all the movement and what's shaking in Russell 2000 from a vol and options perspective. But you brought up an interesting point, and Catherine, I'm actually glad to have you on because we had a lot of questions earlier in the year around the June timeframe, of course, which is the Recon timeframe. A lot of our listeners were hitting us up and asking us, hey, these are unprecedented times. COVID is shaking up the markets, volatility is through the roof. Was there any thought given to changing up the Recon? Obviously, it's that once a year type of event. It has kind of a set in stone type of process to it. But again, like our listener said, these are unprecedented times. I'm curious from your perspective over there at FTSE Russell, was there any thought given to maybe altering? Some people asked if it was going to be maybe more frequent, twice a year to reflect the volatility or something else like that. Was there any thought ever given over there at FTSE Russell to changing the Recon process in light of the unprecedented events we're seeing out there this year, Catherine?
Our policy team did consult the market and clients about whether there should be any changes made this year's process. At that time, though, the feedback was that we should proceed as normal with the June reconstitution.
Yeah, our audience, they're always eager to see what's going on out there. Speaking of what's going on out there right now, a lot is lighting it up. As Sean mentioned, FTSE Russell having a strong week this week, up nearly 6% just from Monday. So a lot of that rally coming over the heels of the last few sessions. Listeners, small caps once again leading the dance. Coming into showtime, we saw RVX, which is, of course, the VIX of the Russell 2000 at about 33.6 or so, puts it down almost exactly 2 handles from where it was last show. The VIX coming into showtime was a little bit north of the 27 handle. I think it has given up a little bit of that now. That puts it up still about almost 2/3 of a point from where it was this time last show. And the VVIX, aka the volatility of volatility, was at about 104.5, up about almost 2.5 points, still hovering north of that new barometer, that new floor we've set of around 100. That puts that VIX to RVX spread, so the spread of large cap to small cap volatility, at almost 6.5 exactly. That puts it a little bit, actually a lot tighter, about 3.15 or so points tighter than it was this time last week. That spread was pretty wide last week. Things were moving around quite a bit Still moving this week, but VIX coming in a little bit and tightening up that spread as a result. Let's get on out there, see what's going on. You guys, as always, can play along with the show, play along with the home game, cmegroup.com/TWIFO or /TWIO. Both of those were coming into showtime. We saw the Russell 2000 at about 16 and a quarter. That puts it up, a good 90-odd handles from this time last week. So another strong week. Back up north of that 1,600 level. Everyone was watching out there in FTSE Russell for some time. In terms of where the action was this week in the options, it was out there in the October contract, which has a whopping 1 day to go. Nearly 70% of the paper going on up there. So we won't look at the skew and the volume out there. But even though the vol is about close to a 30 across most of the months, let's go out a little bit to another active month. Let's go out, to December. Why not? And December has roughly a vol of about 31.10, so even higher vol in December out there. In terms of what was lighting it up this week, it was 1610 calls, so a little bit of a change, and a whole bunch of them going up this week. So a little bit of a change, Sean. Usually we see far out of the money puts lighting it up this week, but this week it's pretty much at the money, now in the money calls that we're trading pretty actively all week. A couple thousand on Tuesday, almost 4,000 again yesterday, and a few more coming in today. A lot of that closing, actually, maybe we had some overwriting going on out there, and as you broke through that 1610 strike, perhaps folks deciding to get the heck out of Dodge. Looks like 1620s were also pretty active, so maybe a bit of a vertical, but even though both of those were closing, so maybe a little bit of some size verticals on that folks were taking off. Sean, anything surprising you about this week's activity out there in the options, or what we're seeing out there in the vol space as well? Vol coming off pretty firmly this week. Any of that surprising you, or anything worthy of note in your eyes out there in all things Russell 2000 options this week, sir?
I'm not surprised. Vols come in as the markets rally. It's one of those things, especially mostly in equities, right? So as volatility comes in and the market rallies, you're going to see folks rolling those buy rights to higher strikes, and those closing of the 610s and the 1610s and 20s. I think I heard you say are folks looking to harvest volatility at another level. And if they haven't already rolled that position, they're probably looking to do that in the near future. But as this market continues to rally, they're probably going to wait to pick their spots. And on the put side, I'm always a big fan of buying puts when you can and not when you have to. So as vols come in, I'm sure that the hedgers out there are looking for the right spot to be buying that protection, and the put sellers are looking for that optimal volatility harvesting. So I'm not surprised. It's just great to see the volume. It's great to see the trading, and it's fantastic to see the indices doing the outperforming that they're doing.
Catherine, we could probably talk about equities for the rest of the show. There's enough going on out there in equity land. We want to squeeze in a few other products, too. But before we do that, and if there's anything you guys are working on over there in FTSE Russell land, or maybe some interesting changes or developments that we haven't hit on yet that you want to let our listeners know about, now is the time, Catherine. The floor is yours.
Sure. Actually, I also cover our real estate indexes, the FTSE Upper Nareit and FTSE Nareit Index Series. We are working on developing a quote-unquote new economy index for the FTSE Nareit Index Series. It combines infrastructure, data centers, and industrials that are related to the e-commerce companies that have been doing pretty well this year. So stay tuned for that later this year.
We will stay tuned for that. Interesting stuff coming up here. I think we have some good listener questions about all things. Listeners always have questions about all things small cap vol. Let's keep on rolling here before we get some of the listeners here as well. Other things that we're lighting it up out here on the tape this week. Again, you guys, as always, can play along. cmegroup.com/TWIFO. And, we get a lot of people asking every week after week, to talk about all things ags.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
We do have wheat lighting it up here this week to the tune of up about 6.5% out here. So let's get out into it. You guys, as always, can go to the drop down over there for ags and then just select wheat. Go to the KC wheat. Obviously, that's where we're hanging our hat. That's also what's lighting it up. 7.75% up this week, as well as, shall we say, the old school wheat also up about 6.5%. Again, you guys can choose whatever you like. I like to choose select all to see everything, but it's up to you how much data you want flooding your screens out there. If you're curious, by the way, how much paper wheat actually does, at least on the KC side, it's a fairly active contract. It's not a Eurodollars, or nor is it a large equity index, but also it's not, shall we say, a platinum either. It's about 42,000 contracts on the tape this week. The most active contract actually coming out there in December, with about 55% of that paper going up out there. KC wheat is at about a 530.5 right now. If you're wondering what the price level is, and the vol out there in the D's contracts, almost 31, about 30 3/4, up about 1 3/4 from last week. So a little bit of vol sneaking in there as well. Let's get to skew, see what's going on in the D's contract. A little bit of action out here. Last week, the puts were kind of cheap, 3.8% cheap. This week, about 6.3% cheap. And then going on to the call side of the ledger, calls about 6.6% rich last week. This week, 9%. So calls getting bid up. Maybe not surprising. We have seen a bit of a rally. About 21 handles over the course of the past week since Monday, up 4.12% just since Monday's session alone out here. And in terms of where the action was this week, number one with the bullet out here were the 540 calls out here in December that were pretty active. Most of that on Tuesday and a little bit coming in on Monday as well. Followed hot and heavy by the 560s. So maybe a little bit of rolling, maybe a little bit of verticals going up out there, but that's where the action was out there in all things wheat this week. And we also saw hot and heavy to the upside. Number 5, our old friend. You guys love it when we talk energy. In fact, you demand we talk energy every week. So it's your show. We're here to oblige you.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
And our old friend WTI lighting it up again this week, up 6.5%. Just since our last show, up 11.25%. Just huge moves out here in all things WTI. We had the show, the option block on Monday. We had our buddy Scott Nations on there, and he was fully in the watching of crude oil mode. I mean, how long have we been talking about, listeners, on this show? The notion that crude oil is going to fade any move above the 40 handle, and the options were revealing that again on the show last week, and yet here we are, back up north of the 40 handle, 41.20 or so. Up a whopping 4 handles and change since Monday's session alone. So big swings, 11% since Monday, and up about 6.5% net since last week's show. We had about a 41.20 right now, and it's the November contract where the lion's share of the action was this week, 52%. Before we get to what the most active contract was, let's look at the vol. The vol actually coming in pretty aggressive. Now, this is a contract with 7 days to go, so bear that in mind. But so much paper going up out here, I kind of can't ignore it. 37.5 is where the vol is in that weekly contract. It's down 18 points from where it was this time last week. In terms of skew, the puts were 6% rich last week. This week, again, the fade is on 20.3% rich to the at-the-money. People are bidding up these puts like they're going out of style. The calls, 2.9% cheap to the at-the-money when we were shy of the 40 handle. Now this week, 16.9% cheap. So rinse and repeat week after week here. So if you're asking to yourself, is the options market once again fading a rally of WTI north of the 40 strike? The answer is a resounding yes. Calls are extremely cheap. Puts are extremely expensive. They don't think we're hanging out here for too long. That was Scott's take, as I recall, as well, from the Monday show there as well. He didn't see any reason, given the global demand impact of the coronavirus and everything else, how crude or WTI can maintain itself north of 40. Sounds like the options market is agreeing out here. If you're wondering how much paper went up this week, it's about a little over 500,000 contracts, almost exactly 507,000 contracts on the tape out here this week. And the most active contract was the 35 put. So that again kind of shows what we were talking about. Folks fading out here, even though most of this activity was actually closing, which is kind of interesting. Let's see, the big day, it was about 35,000 going up. The big day was Tuesday, about 20,000, and about 12,000 on Monday. And the lion's share of both those days were actually closing. So interesting out here. And maybe you think it might be opening, repositioning, but no, actually it was closing out. So maybe some folks had written lines in the sand and they were buying them back Either way, whatever's going on out there is driving up that put skew. So probably some net buying activity out there somewhere, followed by number 2, the 32 half put, so even farther out of the money, going up almost 30,000 contracts this week. The lion's share pretty much equal on Monday and Tuesday. Both days about 14,000 out there. Opening on Monday, a little bit closing on Tuesday. So a little bit of back and forth on the 32 half strike out here, which is kind of interesting and perhaps not at all what you might have expected. A lot of other products on the tape. I don't know, Sean or perhaps Catherine as our guest. If you guys have another product you want to add into the rotation, have at it before I keep going down our movers and shakers. Sean, anything on your radar this week, sir?
You know, you went into two of my dearest, and those were equities and then crude oil. You said Eurodollar's made quite a move this week. Why don't we talk about interest rates? See what with the boosting economy, there's obviously some talk of rates movement somewhere. Let's talk about interest rates.
Let's do it. We are of like minds. My screen, I just pulled it up before you even said that, sir. It's like we've been doing the show a little bit here as we get ready to talk about some rates.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates, like the man said, and it is Eurodollar is kind of the big dog out here in the rate space. Even though you go farther out the yield curve, they get some action out there as well. We're going to talk Eurodollars, like we mentioned. A pretty big week for them yet again, off about 5%, and it was number 1 to the upside last week, so big swings out here in all things Eurodollars. You've seen this interesting dance around the stimulus and how that's impacting the dollar, what's going on with Trump saying we're not going to do a stimulus, and yes, we are, and then back and forth, and the Fed coming in saying there's dangers to not doing enough stimulus, and all sorts of fun back and forth out here, and that driving some action out here in the rates. By way of a frame of reference here, listeners, Eurodollar is doing about 2.6 million contracts as of showtime. So I think it's fair to say a pretty active contract. And this paper actually is fairly spread out, which is kind of interesting. We're going out here into the DEES of just this year. That was the most active contract, even though, like I said, it's only 11.3% of the paper going up out there, which is kind of surprisingly little. That shows how so many other products you talk about are highly concentrated in 1 month. In Eurodollars, there's so much paper, it's just spread out pretty much everywhere. The DEES contract has about 66 days to go. It's at about a 99 3/4, a little bit shy, actually a little bit north of that right now. And the vol, actually about a 15 and change, so a little bit light, coming in a little bit this week. Out here in this DEES contract, the puts were pretty bid last week, 8.1% rich. This week, they are extremely bid, 21.3% rich to the at the money. So a huge bid coming in out there in the puts. I'm going to go out on a limb and say, just looking at that the number 1 contract has to be on the puts, and we'll see if I'm right. And let's see, the calls last week, 8.4% rich as well. This week, 9.6%. So a pretty interesting crooked smile out here for the skew in DEES of 2020 Eurodollars out here, with the puts obviously a wee bit more bid, about 2x what the calls are out there. But still interesting. Yes, I was right. It was the 99 5/8 puts leading the dance out here this week, listeners, with, get this, 143,000 contracts on the tape. That is an impressive amount of volume. That's more than a couple other complexes we could talk about here combined just in this one option. That's a lot of paper. Let's see. The big day was Monday, 72,000 contracts, followed by Tuesday, 54, almost 55,000, and 16,000 on Wednesday. A whopping 1 today, so not a lot going up out there today. But the rest of the week pretty active. Most of that opening as well. So 99 5/8 DEES opening paper. That probably accounts for the huge upswing we've seen in that put skew. Similar paper on the tape there. Not quite as active, but a lot of paper for the 99 3/4, but they're only doing about 66,000, so less than half of the paper we saw in the 99 5/8. And the 99 half puts are also doing about 61,000. So obviously a pretty healthy put strip going up out there. All those strikes pretty active, and all that obviously bidding up the skew pretty impressively out here in all things Eurodollars. Let's look really quickly, see if any other paper is catching our eye before. There's so much. It's kind of hard to parse. So, Sean, we always like to include some metals out here. Our listeners love that as well. Obviously, platinum's not going to do it, but what do you think about sinking our teeth into a little bit of the shiny stuff there, Sean?
Let's do it. Let's go metals.
All right, let's go to the metals out there. You guys, as always, listeners, can play along. Go to the drop down. Go to metals, precious metals, And then let's kick it off here in gold as we dive into all things metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
That one brings a smile to my face. A little bit of a Halloween-oriented drop there as we dive on into the metals. Let's see what's going on out here in the big dog in gold. Again, shy of the 2,000 strike. In fact, shy of the 1,900 strike coming into showtime at 1,897, off about 10.5 handles, or about 0.5%. A relatively quiet week out there on the gold front, but still nowhere near the 2,000 strike any longer. The most active contract out here, once again, going back out to Dees. Dees had about 27% of the paper out here. Let's go see. The Dees contract has about 47 days to go. And the vol, at the money vol, gold vol is always an interesting beast to watch. And it's at about a 1970. It puts it off about 2/3 of a point from this time last week. So again, a little bit of a quieter week. Not surprising to see gold vol coming in a little bit. Let's head on out to the skew. Gold skew, also an interesting beast to watch. It's always moving and shaking and evolving week to week. Let's see what happened out here this week. Last week, the puts were effectively unched to the at the money vol, which is kind of interesting. Not a heck of a lot of bid going all the way out to the 25 delta puts. This week, actually, they're cheaper. They're about 2.3% cheap. So the puts are actually cheap. Folks are fading this downside a little bit, which is kind of interesting. And then we have to the upside, the calls were rich, as they tend to be in gold of late. 2.7% rich at the money this week, or I should say last week. This week, 7.5% rich. So despite the fact that we're selling off out here, we're seeing a pretty strong bid here coming in for the calls. Let's go out and see what was dominating the tape. By way of frame of reference, listeners, 162,000 contracts going up in the gold options this week. So pretty much roughly the same as that one option, one strike out there in euro dollars. But still, it is the big dog when it comes to metals. Again, we saw the calls getting a bid. So that would probably lead me to think that some call paper was dominating the tape out here in December, and that is exactly what we saw. It was the 2,000 calls, so the even money calls in December dominate the tape with about 7,500 contracts. A lot of that coming today. 4,100 on the tape today, about 2,700 yesterday, and the rest kind of scattered throughout the week. A lot of the early paper closing, but we don't know, obviously, what was going up with today's paper from an OI perspective. But still, pretty far out of the money calls in December, dominating the tape, probably accounting for that fairly aggressive upswing in the skew there in December. Followed by, that's not bullish enough for you, 2,100 calls, with about 3,700 on the tape out here as well. The lion's share also today, and the 1,900 calls going up about 2,200 times, about almost 3,000 on the tape. So maybe a bit of a 1,900, 2,000, 2,100 three-legged spread going up out there with a little bit of a kicker in the middle. So maybe a butterfly, 2,000 by 4,100 by 2,100. That's possible out here. We've seen a lot of upside flies are kind of the trade du jour out there in gold. Now maybe Dees is actually a little bit close. Some of these flies like to go out a little bit farther out. Let's go quick scan to see if any of that is the case this week. Remember, we've been talking about some funky strikes of late out here in far off gold upside. And yes, that is indeed the case again this week. So if you're wondering, listeners, are the funky flies, are the funky verticals, are the funky three-ways back for size here in gold? And the answer is yes. This time, though, we're going out to Dees of next year, December of 2021. Looks like we've got the 22.5, 2,500, 3,000 vertical going up here, 1 by 2 by 2, so not quite a fly. As opposed, it would be 1 by 2 by 1 if it was a traditional fly, listeners. So it could be a call with a vertical kicker against it, going up 1,000 by 2,000 by 2,000 times on Tuesday. Also looks like it went up again today, 1,000 by 2,000 by 2,000 times. Exactly the same amount of paper, actually, 2,100 on the 3,000. So maybe taking it off, or maybe they're piling in for more. Either way, someone looking for maybe a wee bit of upside out here in gold in December of next year, 22.5, 2,500, 3,000 three-way. We love these things out. These have been going up with a pretty alarming degree of regularity out here. Surprising how much liquidity they're able to find in the far out-of-the-money options well over a year to go. But that seems to be the case. A pretty popular trade out there in all things shiny stuff, all things metals. But you know what, listeners? You guys are always hitting us up with some great questions. I want to make sure we squeeze some of you guys on the show as well. So without further ado, it's time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your feedback segment. The man just broke down how the many different ways you guys can reach out to us, get your questions, your comments here on the program. If you want to join us live every Thursday, 1:30 p.m. Central, we usually bump you guys to the top of the list. But Sean and Catherine, put on your question answering pants. First one is right up your wheelhouse here. This comes from Ruth. Ruth says, hello. Well, hello, Ruth. She says, I'm looking at small cap stocks in particular. She says, have you noticed any specific trends or impacts from COVID-19 that you aren't seeing in large caps? If so, what are those and what makes small caps uniquely subject to them? Thank you very much. Well, I know Sean and indeed Catherine, you guys over there at FTSE Russell have been doing a lot of research on the impact of COVID-19. In fact, that's a whole hub on your website over there. What do you guys have to say for Ruth, who wants to know, have you noticed anything interesting that's unique to small caps in terms of the impact of COVID? Whoever wants to take it, Catherine or Sean, you can have at it.
Catherine, you want to go first, and then I'll follow you?
Sure. I think we touched upon this earlier about, the new companies getting added. A lot of them are Russell 2000 biotechnology companies, so lots of innovation happening with these smaller companies. And they're joining the indexes. So I think that this has certainly been an interesting trend this year. And Sean, feel free to add to that.
I would add, and great question, Ruth. As we talked on the show and we brought up today that, Russell 2000 small cap index is mostly very, very high, if not all, domestic U.S. stocks, right? So, and lots of small businesses, of which will benefit greatly from economic assistance from the federal government, which is being talked about, and which happened earlier in the year, and we saw quite a rally during this COVID crisis because of the incentives given to small U.S. businesses. And there's another big push for that coming, which I think was some momentum behind the movement of this latest small cap rally. And you've got a heavy-weighted healthcare sector. Catherine just mentioned biotechnology stocks, but healthcare overall is a strong weight within the index. So when you see things that are helping the healthy environment from an economical perspective, that's all bullish for small caps, or at least for the Russell 2000. So you're seeing lots of different things within the U.S. economy and COVID-related from a health perspective that are movers of our index, positive and negatively. But you know me, I'm the guy that always picks to go to the light side at the beginning of the show, so I'm always bullish. But that's why I kind of went, oh, Catherine, when you went dark side at the beginning of the show, I was.
I'm sorry, I didn't know.
About that. No, it's all good. It's what brings volatility to the show and to the marketplace, right? It's all fun. But Ruth, I hope that gives you some color, some more insight as to what's driving small caps.
Well, Catherine, I for one appreciate you going to the dark side. Shakes it up. Sean's always the light side guy. So I like mixing it up. If you have anything else you want to add for Ruth, Catherine, feel free.
Sure. I'll add that, Sean alluded to the healthcare industry being a larger weight in the Russell 2000. As of the end of September, is about 21% of the Russell 2000. versus about a little less, a little shy of 14% in the Russell 1000. So a bigger weight for healthcare companies in the Russell 2000.
And you mentioned, Sean, a number of times here on the show, kind of the net trend we've seen, right? Large caps versus small caps in the wake of the pandemic has been, the large get larger and the small get smaller. And we have seen that. You talked about the overall market cap in the Russell 2000, lower than we've seen on the downside there as the massive names everyone talks about continue to spiral upward. We've seen troubles abounding out there in the small cap. So net, it seems like that has been the trend as well there, Ruth. Small getting smaller, the large getting larger. We'll see if that continues as all things COVID, and of course add the election to that mix, add civil unrest to that mix, and it's just an unprecedented year. But anyway, I think probably check out the COVID-19 Impact Hub over there at FTSE Russell as well. A lot of interesting research. Probably get lost for hours in all that. Unfortunately, we don't have hours left on the show. Let's see if we can squeeze in a few more of you here. First up, we've got Nils. Nils wants to know, great discussion on Fed funds options last show. Well, thank you, Nils. I always have questions about some of these products and why they don't trade more. My favorite these days is cheese. Oh, cheese and dairy. Thanks for the great network. And I've sung your praises on every podcast platform under the sun. Well, thank you for that, Nils. We love the reviews out there. If you like what you hear, listeners, follow Nils's advice and head on out to your platform of choice. Leave those reviews. Again, more important than ever in these troubled times to have a reliable source of information. People, we've been out there for coming up on 14 years. We kind of really kicked off this whole options podcasting thing back before the iPhone was even a twinkle in Apple's eye. So if you like what you hear, keep those reviews coming so new listeners who are new to the markets, new to our network, can discover what we have out there. Well, Nils, you're in luck. Class 3 milk is moving out there this week. It's number 4 to the dark side, off 2 3/4%. And because you asked so nicely, we'll go check it out right now. If you want to find it for yourselves, listeners, go to the agriculture drop down, then go into dairy. And right there on the top, Class 3 milk. We have joked about dairy in the past, but it's actually becoming a slightly more active. I use slightly out there because it's not Eurodollars by any means. The entire complex is doing about 4,000 contracts this week. But compared to what it used to do, that's actually not bad, I should say. It's at about, that future's at about 25, actually about, let's say about 20 and a half. 20.66 out there in that front contract that has, looks like about 26 days to go out. That's also where the lion's share of the paper was, about 40% of the 4,100 contracts coming in that front October contract there. It looks like 21 even calls are leading the dance out there. In terms of vol, what is the vol right now? In Class 3 milk, it's 10 pretty much even, off 5 1/4. So that vol in that front contract coming in pretty aggressive. Actually, it's coming in across the board here, listeners. It jumps up quite a bit, though. If you go on out to November, it goes up to a 29 volatility. So a 10 in the front month, and then a 29 if you go out to November. You see that in some of these ag products, interesting cycles to these products, and then about 28.5 out to December. So a little bit farther out in the dairy term structure there, the vol gets a lot juicier there. What was the name there? Nils. And in terms of cheese, I don't think cheese really is lighting it up. We can pull it up really quickly if you like. Let's go to block cheese. Really quickly. Oh, a whopping 24 contracts there, Nils. And in case you're wondering, yes, we can also do cash-settled cheese. We'll do the whole dairy gamut. A little bit more active out there in cash-settled cheese to the tune of 1,750 contracts. If you're wondering where the heck is cash-settled cheese trading right now, it's at about a 2.196. So factor that into your models out there if you're watching such things as cash-settled cheese. Same exact vol structure as we saw in the milk out there, which is about a 10 in the at-the-money vol in that front future. And then you get out to November and December, it jumps up to about a 29. So interesting term structure from a vol perspective out here in cheese and in milk. All things dairy, pretty much. A little bit of paper, too, about 1,700 contracts. Again, it's not Eurodollars. That's a rounding error in Eurodollars. But for the dairy complex, starting to come on a little bit. So great question there, Nils. Let's see. Let's do one more here, and then we'll come around the horn here. This comes from Selvey. Selvey says, "Thank you for creating the TWIFO reports and making them available for free online. Well, you're welcome. I didn't create them. I was actually Nick and his team over there at Quick Strike, but we'll take all the credit, of course, and getting them out there and available for yoshimigroup.com/TWIFO or /TWIO, TWIO. He says, I have begun using them to inform my gold trading, and it has made a world of difference. Just seeing the changes in volatility and skew from week to week have proven very informative. Well, thank you for that, Selvi. And, I've said it before, I'll say it again. If you're trading any of these futures options products and you're not using these analytics to do it, I'm really not sure how you're doing it. Maybe you have a broker that has a great analytics suite, and that's the case. Or maybe you have your own custom proprietary platforms you like to use. You're a CTA out there or something. That could certainly be the case, but I would still think if you want to trade these things and you're trading things that trade on CME Group, like most of you are, then it's kind of hard to do it without these tools. It's kind of the only game in town. So glad, Selvi, you're taking advantage of these reports. And everyone else out there, if you haven't done it yet, cmegroup.com/TWIFO or /TWIO is the place to go. All right, listeners, unfortunately, that music means we've come to the end of another epic sojourn through the world of all things futures, options. Catherine, I want to thank you for doing an able job of holding down the CME Group hot seat today, breaking down all the things going on. And there certainly are a lot in all things small cap, and indeed, everyone thinks it's all small caps in Russell, but there's a lot more going on over there. If there's anything else that came to mind, Catherine, while we were doing the show here, you want to add here, little trends or interesting developments or changes, or maybe you want to give our audience another little tease, another little hint of what you're working on, have at it, Catherine. The floor is yours, madam.
Sure. I will just add, in terms of yield-focused products, that we've been seeing a lot of interest in our FTSE infrastructure, the core infrastructure indexes. In the low-yield environment, people are looking for, equity income ideas. So that's been one theme, similar to the FTSE Nareit New Economy Index idea I mentioned earlier. There's a lot of interest in infrastructure indexes lately. And thanks again for having me, Mark. It's been a pleasure.
And Sean, if our listeners want to check out any of that fun stuff, any of the changes that Catherine was breaking down in a little bit more detail, or maybe they want to be like our other listener, there was a name Ruth, I believe, who wants to see more data on all of the impacts of COVID on all things FTSE land, where should they go? What should they do, sir?
Well, Catherine, first of all, great to have you on the show. Thank you again. And secondly, there's some exciting news, and that is that this isn't the last time you're going to hear Catherine. There's going to be a couple of great opportunities coming up in the world of webinars. There's one on October 23rd that we're hosting. We're going to have Catherine as moderator, but she's just not a moderator. She's obviously going to be talking about the markets and about the indices themselves. And she's going to be moderating three fantastic panelists. One is going to be Tim McCourt, one of our dear friends, Mark, Global Head of Equities at CME Group. There's also going to be Mark Barnes, who leads our index research at FTSE Russell. He's the Managing Director of Index Research. And Christia Kulian, a CFA, who heads up iShares America's markets coverage with BlackRock. So there's going to be a discussion about what's been moving the markets, what's been driving the performance of our large cap and small cap indexes. And it's going to be one of those great conversations amongst some of the most fantastic leaders of the various product sets of the entire Russell ecosystem. So it's going to be a fantastic one. And then Catherine is on another webinar in November with SIBO hosting, with folks from Wilshire and Neuberger Berman talking about the indexes themselves, how to trade derivatives on them from a harvesting volatility perspective. So that's going to be on November 11th, coming out of CBOE. So be looking for those invites. Mark, we're going to get those to you so that you can push them out to your clients and to your listeners, so that we get a great audience to learn a lot and to participate as well with Q&A and be participants in. But overall, if you need any of this information Catherine spoke about today, just go to our website, FTSERussell.com. It's all there. And if you need help navigating through the website, I always give you my email address, smith@FTSERussell.com. Email me. I'm happy to navigate you through it or have a discussion with you about it. I'm here to help. So, again, thanks for having us on the show, Mark, and look forward to being on the show next week.
There you go. Check it out, FTSERussell.com, webinars is the place to go for the webinar links. We'll, of course, have those when they're available, and we'll send them out for you on all the social medias as well, so you guys can check them out. Sounds like you have a lot of questions about all things COVID and small caps and large caps and volatility, so a lot of great webinars coming up there. And, of course, you know where to go. I've said it a million times on the show. If you want to get access to those reports and everything else going on this show, cmegroup.com/TWIFO is the place to go to begin your journey. Check out the education they have there as well. Links to a great show called TWIFO up there, as well as all the great research from Blue and Eric and the rest of the team. A lot of great stuff to sink your teeth into over there. And on behalf of Catherine and Sean and our friends over there at CME and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in so many great questions. Keep them coming. Remember, if you like what you hear, keep those reviews coming in your platform of choice. And we'll see you back here tomorrow, noon Central, 1 p.m. Eastern, for Volatility Views. Then it kicks off again on Monday with the option block all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.